From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 5th, 2017. Today we're going to be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. Looking here at the daily time frame, let's go back several months. Over the past several months, we've been studying, first off, the uptrend. You can see the blue trend line here on the chart. The market was clearly, since January of last year, 2016, we were in an uptrend. It was moving higher. We had periods of rising and falling, rising all the way up to the highest high, and then it began a new fall, which has continued until today. Up here at the very top of the chart, over the past several months, we've studied the head and shoulders pattern that developed up here along the black trend line. If you see that up at the top of the chart where the red circles are, the head and shoulders pattern that developed. Since then, it broke back underneath the blue trend line from the previous uptrend and has continued to pressure lower. So that's really what we've been studying. The rising trend, head and shoulders reversal pattern, and then the ensuing downtrend. The break of the blue trend line, the rally into that blue trend line, finding resistance around that underneath side of the trend line, and the 100 period moving average became an opportunity that we took several weeks ago for a sell or a short here on the NZD, and took a good profit on the way back down. Now we're seeing a little bit of a retracement again, very similar to what happened here. We see the retracement into the red trend line. It hasn't gone all the way back to the red trend line, but we do see that period of retracing against the overall downtrend. What that period of retracing does is gives us an opportunity to actually go short in the direction of the trend at a better price. You know, often if you're going to sell anything, you don't want to sell it at the lower price. You want to sell it or go short at a higher price. So what we wait for is that rally into resistance before we look for an opportunity to go short. You look back along the pink shaded area between 69.70 and 7,000. That's right here in the middle of the chart. You see the black circles on the chart. Black circle here shows us support. Back here, these three circles together shows us support at the pink zone. And even to the left-hand side, you see resistance into that same pink shaded area in the middle of the chart. So resistance and support shows us that this area around or just underneath 7,000 has been a historical decision zone in the market, where the market is making trading decisions to buy, sell, enter, and exit. So we have the current downtrend and a retracement within that trend back into resistance. We see clear decisions being made around the pink shaded area. You take Fibonacci from the highest high of the red trend line to the current lowest low, the recent low that was made here on the chart, and you find the 0.236 fib sitting right around the 69.90 or so level in the middle of our pink shaded area. So all in all, what I'm trying to get you to see is I think this pink shaded area is our resistance for the potential return in the direction of the trend. Now, there's always risk in the market. The risk is it doesn't do what you expect it to do, and the potential is that it breaks above the pink zone and goes back up again. Let's go ahead and zoom it in one time here. So you take a look at the pink zone. We've already outlined the fact that that is our resistance. We see already today the market finding resistance, and not really just today. 1, 2, 3, 4, 5 days have now found resistance underneath the 7,000 level. So if we're going to do anything, we really don't want to go long. We don't want to buy this currency pair underneath the pink shaded area. It just doesn't make a lot of sense to do that. We're finding resistance. It's having a little bit of infusion of sell orders. That's what that long wick on the top of the current daily candle means. We've had this infusion of sell orders. We don't want to go long into the pink zone, but we have a better opportunity to go short, targeting back down to the next support, which is, of course, the green shaded area down here into the low 69s, upper 68s. But then if it can break down through there, we look for further movement lower here for the New Zealand dollar. So all in all, we're selling the pink zone, targeting the green zone or lower. Our risk is to break back above the pink shaded area. Now, often what I'm looking for is that resistance and then an infusion of sell orders, price action that indicates sellers are interested in the currency pair. That's what we see. We don't know what this daily candle is going to end up like. It could end up a big blue candle. We just don't know. But we can take some interest in the 4-hour time frame, as we've already seen that pullback, and now the market getting back underneath the pink zone on the 4-hour time frame. So what I'm looking for today is for it to stay underneath that pink shaded area today, and giving us headway back down towards the green shaded area. I have placed a pending sell order right at 69.70 at the bottom of our pink shaded area. So I actually would like to see it bump back up to the pink zone, find resistance, and then start moving its way back down towards the green zone. So That's what I'm looking for, the sell on the rally back into the pink zone or just touching the pink zone one more time and targeting back down to the green zone or lower for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.